You borrow $20,000 and end up owing the Mafia $2 million. You borrow $20,000 to save your business. 2 years later, a man you've never seen before sits across from you in a quiet diner and calmly explains that you now owe $2 million. He says it the same way a bank teller would tell you your account balance. Matter of fact, no emotion. Then he slides a small notebook across the table. Inside is your name, your address, your wife's name, your daughter's school, and a payment schedule. Welcome to the most expensive mistake of your life. The story starts 2 years earlier. You own a small auto repair shop in a dying industrial town. It used to be profitable. 10 years ago, the parking lot was full every morning, but factories closed. People moved away. The town shrank, and slowly your customers disappeared. By the time the story begins, you're surviving month to month. 3 mechanics, 1 ancient lift that barely works, and a stack of unpaid bills on your desk: rent, tools, insurance, parts, suppliers. The shop needs $20,000 just to stay open. A bank would normally loan that easily, but you already tried twice. The loan officer gave you the same sympathetic smile both times. Your credit score isn't the problem. Your business revenue is too unstable, too risky. They wish you the best and decline the loan. That's when your cousin Mark tells you about a guy. Mark says the guy helps small businesses. Quick loans, no paperwork, no bank approvals, just a handshake. You should already know this is a bad idea, but desperation has a way of turning bad ideas into reasonable ones. So you call the number. A man named Victor answers. His voice is friendly, professional even. You meet him the next evening at a bar near the highway. Victor doesn't look like a loan shark. No gold chains, no tattoos. He looks like a mid-level manager. Button-down shirt, clean haircut, nice watch. He asks about your business, how long you've owned it, what the money is for. Then he nods. $20,000 is no problem. Interest is 15% monthly. You hesitate. That sounds high. Victor smiles. Banks charge less, but banks said no. He places a stack of cash on the table. $20,000. Your shop stays open. Your mechanics keep their jobs. Your daughter's school tuition gets paid. And all it costs is one small loan. You shake his hand. For the first month, everything works. Business improves slightly. You pay the first interest payment, $3,000. Victor sends a text. Good doing business with you. You start to relax. Maybe this wasn't such a bad deal. Month 2 is harder. A transmission job goes wrong. Parts costs eat your profits. You miss the payment deadline by 3 days. Victor doesn't complain. He just adds the interest to the principal. Now you owe $23,000. Next month, the interest is calculated on that. You start doing the math. The numbers make your stomach hurt. By month 6, the loan has become $40,000. You are making payments, but they only slow the growth. They don't stop it. Victor becomes less friendly. He stops meeting at the bar. Now he sends a driver. The driver doesn't talk much, just waits while you count the cash. One afternoon, the driver asks a question. How's your daughter liking school? You freeze. You never told Victor about your daughter. Month 9. The debt hits $70,000. Victor finally visits the shop himself. He walks through slowly, looking at the lifts, the tool cabinets, the office. He nods politely at your mechanics. Then he says something that makes your heart drop. You have a nice business here. Not you run a nice business. You have a nice business. Ownership is implied. By the end of the first year, the loan has reached $180,000. You haven't borrowed another dollar. It just grew. Interest stacking on interest like a financial avalanche. Victor sits down with you again. He explains something called compound penalties. You missed payments, which triggers higher interest tiers. He says this calmly, like a professor explaining algebra. But there's a large man standing behind him now, just in case the math becomes confusing. Year 2 begins. You start taking desperate measures. Second mortgage on your house, selling tools, working 16-hour days. But every payment disappears into interest. The principal barely moves. Victor introduces you to a new opportunity, Some of his friends need vehicles repaired. No paperwork. Cash only. You know what that means. You agree anyway, because the alternative is worse. 6 months later, you're repairing cars with hidden compartments, license plates that don't match registrations, engines from stolen vehicles. You don't ask questions. Victor reduces your interest slightly, but not enough. The debt still grows. Then one morning, Victor doesn't show up. Instead, two unfamiliar men arrive. They sit in your office. One opens a folder. Inside is a printed balance sheet. You owe $1,960,000. You laugh. You think it's a joke. It has to be. You only borrowed $20,000. The man explains the math. Interest, penalties, late fees, operational risk charges. You stop listening halfway through because the numbers stopped being real. They give you 3 options. Option 1, pay the full amount. Option 2, transfer ownership of your shop and house. Option 3, work for them. Working for them means something very specific. Your garage becomes part of their operation. Cars pass through your shop. You modify them. Install compartments, swap VIN numbers. No questions asked. Your debt decreases $25,000 per job. At that rate, it will take 4 years to clear. Assuming nothing goes wrong, something always goes wrong. 3 months later, police raid a warehouse connected to Victor's group. Nothing directly linked to you, but now your debt includes legal risk compensation. The balance increases again. You stop keeping track. Your wife notices the change. You barely sleep. You check every car that passes the shop, every unfamiliar face in the waiting room. Eventually, she asks the question, "What did you get us into?" You don't answer, because saying it out loud would make it real. The breaking point comes on a rainy Tuesday night. A car arrives on a flatbed. Inside the trunk is a hidden compartment you're supposed to repair. But when you open it, you see what's inside. Not drugs, not money, weapons, military rifles, dozens of them. This isn't smuggling anymore. This is something bigger, something federal prison big. That night, you sit alone in your office, looking at the original loan agreement, $20,000, one handshake, one bad decision, and a debt that became a life sentence. You realize something important. You were never meant to pay it back. The loan was bait. The real business was turning desperate people into employees. The next morning, Victor arrives again. He asks if the rifles are ready. You look at him for a long moment. Then you ask a simple question. What happens when the debt reaches 0? Victor smiles. The kind of smile that answers everything without saying it. Let's focus on today's work. That's when you understand the truth. There is no final payment, no clean exit, no zero balance, because the debt was never financial. It was ownership, and the moment you borrowed that $20,000, you stopped owning your life. This story is fiction, but predatory lending operations like this exist all over the world. They follow the same pattern every time. A loan that's easy to accept, an interest rate that seems manageable, and a debt that grows faster than any person can escape. So here's the question. At what point in this story would you have realized there was no way out? Let me know in the comments. And if you want more stories like this, make sure you subscribe before the next one drops.